Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today being Tuesday, we didn't have as much happening in the markets. So a lot of sideways momentum has been happening since Monday, but volatility will be expected to be on the upper side once the week gets busy on Wednesday. So as for now, what we are seeing, especially in the economic calendar, is a lot of low impact news, ranging from revised industrial production data from Japan early this morning to Swiss trade balance, which came in better than expected. German producer price index showing an impressive slowdown, indicating that inflation pressures are easing. European current account at 3.6 billion, lower than expected. And of course, a set of positive data coming in from the US. And this is building permits as well as housing starts, which came in better than expected, basically indicating that the housing sector is getting busy. So the number of new building permits are 1.49 million compared to an expectation of 1.42 and a previous reading of the same. And of course, for housing starts, the number of new houses that are beginning to be constructed, 1.63 million compared to 1.4 expected and 1.34 previous reading. So it basically shows a housing market that is picking up. It could be getting hotter again, and this could be a challenge, especially to Powell. For the Fed, they are looking at these numbers cooling down off completely, which would basically provide the necessary environment for prices to cool down towards the 2% target. So going forward, we will be expecting a speech from FOMC member Williams at 6:45 p.m. Then monetary policy meeting minutes for Japan at 2:50 a.m. That is on Wednesday. Then early in the morning, we'll be looking at inflation data coming from the UK, where we expect inflation to slow down from 8.7% the previous month to 8.4% in May. So as you can see, nothing much is happening on the economic calendar side. So in terms of news, there is a Chinese People's Bank of China going for a rate cut of about 10 basis points. This is quite impressive. It's expected to strengthen equities in China, but on the other hand, weaken the Chinese currency. So besides this, there is the issue of NVIDIA, which has been the main stock for the year. For the first 6 months of the year, NVIDIA has been on the spotlight, has made quite an impressive return. And we know that President Biden, that is the US president, basically banned NVIDIA from selling or exporting its top AI chips to China. But then a new market has developed in China where the same AI chips are able to get to China, but at a higher price, almost double the cost that they are getting from the US. So that's one of the stories in the market right now, that even if you are in China, you will be able to access these chips, albeit at a much higher price, because they can not be sold in the conventional markets. So in this case, there's a black market for the same. So that being mentioned, we are not seeing much happening in the charts. Of course, commodity prices are expected to skyrocket since Russia is looking to disrupt a major trade route. So in this case, we will be looking at cotton, cocoa, coffee, among other commodities that pass via that route of Russia through to Asia. Besides these, the dollar index began early morning by dropping, but for the rest of the day, it has made an impressive recovery in the London session. So as we get into the New York session, we are looking at the dollar potentially breaking the high of the day and continuing the momentum of the last 3 days. And in this case, with a strong dollar, then what we are seeing is an effect where the pound is now losing against the dollar after reaching a 14-month high. We're also seeing the same effect here, the euro losing to the US dollar, and of course, the Canadian dollar losing to the US dollar, in this case, an upwards momentum. So as for the yen, you can see US dollar has been losing to the Japanese yen, but now in the last 1 hour, it seems like the USD is attempting a recovery. For gold, we expected an upwards momentum, but now with the dollar resuming strength, It's a clean break towards the lower side. We have already broken the low of the day and yesterday's low. So potentially some further downside momentum. So since we started the New York session at 3:30 p.m., it seems like momentum is now clearly headed downwards. So the last 1 hour candlestick is quite telling. We haven't had quite a candlestick like this in about 2 days. So now it makes sense that gold could be moving further back downwards. So remember, this happened after testing a key price level of 1953, which we had identified as a major resistance level or central point. So now after getting to this point, major momentum downwards as the dollar continues being strong. However, the immediate and very short-term target seems to be 1938, which has been acting as support several times here. So once the price of gold gets to this point, then there's a good chance we'll be seeing a bounce. But also we need to observe closely, because if it breaks that level, then we go down lower and perhaps we start looking at the most recent swing, and this is all the way down at 1924. So this is a pretty important price point, 1938. So once gold gets to this price, then from there we may observe to see if there's a straight out break or the market bounces from this area. So this is a key level to observe for today. So for Australian dollar, after having the news early in the morning, that is the monetary policy meeting minutes, we saw the price made a very nice drop here. So for the majority of the London session, there was not much movement, but now getting into the New York session, we are getting a strong directional momentum here. So there is a good chance we'll be seeing some further downside happening from here. Of course, if you zoom out your charts, you'll notice that we have already broken a major trend line or a key price level. So in this case, we could be expecting some further downside. Perhaps if we were to check using the daily price action, then you'll notice the major swings and where they appear. So it seems like a couple of days ago, this was acting as a major support. So it might be the first stage, 0.67542 as a nice target. And if the market was to break that area, then the other significant level seems to be around here, 0.67168. So as for US equity indices, while the dollar is making a recovery, they're also making a recovery. So we are seeing the recovery happening in the NASDAQ. So after the sharp drop a couple of hours ago, we have seen a recovery happening here. So there's a good chance we'll be seeing some further upside happening here. So the last 4 candlestick is very telling, indicating bullish engulfing here. So for those who know the pattern, these 2 candlesticks represent what we call a bullish engulfing. And now on the current candlestick, we could be seeing some further upside momentum happening with the US Tech 100, though on low volatility. So it's the similar case for the US 500. Notice that the market was consistently moving downwards, and now this candlestick completely engulfs the previous one, indicating a strong entry by buyers. So we could be seeing some further upside momentum or other recovery of the 2 indices, whereas the recovery on the Dow Jones seems to be the weakest. So while oil prices were expected to continue rising early in the morning, so our target remained the same at 77.547. However, what I'm seeing here is a scenario where the market made a good rally, jumped all the way up and formed a pin bar. So a pin bar is the small candlestick with a long tail towards the upper side, basically indicating a rejection of higher prices. So since then, we have seen the market really struggle to break that area and move further back downwards. So now we can identify that there is a path that the market has been following around here. And on this path, if the market was to continue moving further back downwards, then a break below this area would basically imply our tipping point where we change our initial thesis about this chart. So in this case, I'm trying to be as accurate as possible. So this is the lower trend line. And now the upper trend line is by connecting this high with this high, and these are the high, and this is what we have now. So since the market is oscillating between the 2 lines, so if you go to a smaller time frame, say the 15 minutes chart, you can see the major swings here: swing down, swing up, swing down, swing up, swing down, And now the market is approaching the lower side of the trend line. So the idea is to observe the reaction or the price action around this area, whether the market breaks out straightforward or makes an impressive recovery. So of course, if it makes a recovery, then that would be the opportunity to go for a buy position. So USD set CNY basically still moving well. So dollar making an impressive run against the Chinese yuan and almost getting to our target of 7.19057, which was the high of last week. And of course, for the European top index, we managed to see a triple top. So if I zoom out, you can see the first, second, and that top happening here. And once the market go to this top, pull back downwards. Remember, this is the 4-hour chart. So now from the 1-hour chart, we are seeing the market attempt to make an impressive comeback here. But then it's also pretty important. Notice that there are trend lines that are being respected here. So notice how this played out. So despite having the trend line, I would like you to focus on this one. So I remove this arrow here. And now you'll notice the bottom here and the market retesting the second, the third time, fourth, fifth, and the sixth time. But in this case, there was a break. So once the market broke this trend line towards the lower side, there was a retest, and now there seems to be another retest. But it's clearly an indication that the market had broken towards the lower side, and there's a good chance we'll be seeing some further downside. So whenever there's such a break happening of a major trend line, you expect the market to do a retest and then continue in the direction of the break. So the theory is that there's still some good chance we'll be seeing some further downside in the Eurostoxx index. So for New Zealand USD, very strong correlation with Audi USD. So still some further downside expected. And of course, we have a major support area here. This was a major swing level, market going down and then up. And now that we are dropping, we have already broken this area here. Then the next target remains 0.61128. So this is still a very potential play for New Zealand USD traders. So for US oil, it's a similar thing with Brent oil. The market is just ranging, trading within two trend lines. So we have already identified this. And of course, on the lower side, we have this. So the market is currently testing this low here. So it's a wait and see. So you just need to wait, see how the market reacts, and then trade that. So here we have a very interesting case for USD against the Swiss franc. So we cannot observe this was a major support level for US dollar against the Swiss franc. So after the market broke this and struggled to move upwards, you can notice what happened yesterday. So the market goes up, gets to that resistance, and then faces an immediate rejection and price drops. Sorry, this was early in the morning, not yesterday. So today, the market is pushing again and attempting to break the same level a second time. So the idea is, if after testing this area, there's a straight out rejection, then a short selling trade would be very easy to execute and go for a target of the previous low. And this is if the market is unable to break the 0.89863. However, if there's a straight out breach of that level, then we look at the previous high. So 0.905 becomes a nice target as it was the previous high here. So it's a key decision point for USD CHF traders. So all you have to do is to be patient and watch, wait, and see what price does around that level. So for pound yen traders, we know that this was a major high, but then since the market was extremely overbought, we saw the market forming some form of consolidation before breaking down lower. So the consolidation was taking this path here. And on the lower side, you can see the lows and the path they were taking. So earlier in the day, the market made a break, retested, and pushed down further back downwards. And there seems to be more room for further downside momentum. So pound yen shorts might be welcome going forward for the week. And of course, there's a correlation with euro yen. which had reached a 15-year high earlier in the week last week. So last week, we saw the Euro JPY made a 15-year high. So from forming that 15-year high, what we are seeing here is the market eventually breaking a trend line, retesting and pushing further downwards. So in this case, there's a good chance we'll be seeing some further downside momentum happening in the Euro JPY currency pair. So both pairs seems to be pretty overbought. So for Euro Yen and Pound Yen, there seems to be some good opportunity. They will be going further back downwards. So as for Japanese 225 index, what we are seeing here is some further upside momentum followed by a pullback. So we might be looking to trade the momentum once the market breaks the trend line. So we don't have a break yet. So I would say it's a wait and see kind of scenario. So if the market eventually breaks this trend line towards the lower side, then we could be able to identify some trading opportunities. So since there's not much happening in the news side today, then the session will be a little bit short today. So thank you very much, everyone. Thank you for joining the session, and I hope to see you on the next session. Hello, Benson, Charles, and Philip. Thank you for your responses on the comment section. I always appreciate you having you on the session. So thank you very much, guys, and see you on the next session.